Hi traders, this is Blake Morrow. You were listening to the Lunch Money webinar, or Lunch Money webinar. You were listening to the, see? I am tired. I actually stayed up a little bit later than normal last night because I was watching the yen, as many of you guys were. Although, I just, I tell you, it has been extremely volatile, and I was more curious to see if the dollar yen was going to break higher or not. And the dollar yen has made some pretty crazy moves due to Prime Minister Abe really um, talking about the big stimulus package, and being in coordination with the being in coordination with the BOJ. Um, hold on, really quick. Hold on. Okay. Anyway, um, so this move in the dollar yen, I mean, and I'm going to actually just do this bias chart really quick. I'm going to put this on here. I was more curious to see if we're going to break above 107 or not, because if we broke above 107, I mean, this is going to be an extremely bullish move. There's a report. There's a report about the BOJ, or excuse me, the Japan also issuing a bunch of bonds, and that was denied. And I think that's what took down the dollar yen from its highs. But what you can see here is just kind of what I drew yesterday, that we could get a bounce. I didn't think the bounce would. I was like, yeah, you can wait for a dip to 104.50 and then look to go long. Obviously I didn't know that was going to happen. Crazy move here. But what I think is more important, like on a longer term basis, regarding the yen, is what and how do we act up here around this 107 level? And we breached 107 last week, and we got as high as 107.50. We came off of it, but it's really that big 618 that's right there. We rejected almost right at the same price last night at 106.50. That's a big deal. It's a big deal to me on a more longer term scale on what to expect out of the yen, and that's why I'm curious to know if we're going to develop a breakout above 107 and change. Obviously with equity markets as strong as they are, the possibility of us breaking higher is high at this point. But the flip side to that is if we can't get above 107.50, especially by the end of this week, because remember we got the BOJ on Thursday night, Friday morning in Japan. If we can't break out and equity markets start to weaken, then the yen pairs, and the yen, specifically the dollar yen, is a short. Now, I'm going to be sidelined with the yen pairs. I'm not doing anything with them at this moment. I want you all to know that aside from the pound dollar, I'm actually going to stay away from. I'm going to stay away from the U.S. dollar going into the FOMC. I'm going to stay flat these currencies at these dollar pairs at this point. But it will be really key today, especially when you're talking about the dollar yen. If we can't scale back above 106.50, here I'm going to just do this early, 106.50. That's going to be key resistance today. All right, it is key. Obviously above that is 107.50. We break above that, and then it's off to the races in the yen pairs. But right now, we are range bound in the dollar yen. Support. Get rid of that really quick. Support for the dollar yen is going to be somewhere down here, because you have to figure, okay, well, when is it a failed rally attempt in the yen? And I suspect it's right there. Okay, right here. By the time we get up there, so it's going to be below 105.30. So if we break below 105.30, I think that's going to be very problematic for bulls. All right, I'm staying away from the dollar yen for now, but you have to imagine, we have the FOMC today, and if the FOMC is a little bit more hawkish in their rhetoric, that could obviously give the dollar a boost. And if the dollar gets a boost, then the dollar yen, does that get a boost with it, or does the dollar yen reflect what's happening in equities? Because if the Fed is a little bit more hawkish and the rhetoric is a little bit more hawkish, the stock market may come off, and then the question is, well, how does the dollar yen react in all this? So I'm more concerned right now with here and here. I'll show you here, okay, and obviously here. Okay, and also keep in mind, I'm going to do this again. Okay. Oops, that's not really what I wanted to do. Well, that's fine. Um, 786 is right up here too. I think this will define the yen. Really, it's above here or below here for today. What are we going to do ahead of time? Between now and the FOMC, I bet you we do this. Boop boop, and then we're mid-range, right? You know us. Just before a big announcement like today, we're probably going to end up going mid-range, and mid-range probably will take us right to about here. All right, let's go over to the euro. Now, the euro dollar, this is going to be I got out of my euro short yesterday, and the euro is near 110. Now, a very good friend of mine, a trader friend of mine, said that there's a lot of options expiring in the euro dollar around the 110 level all week. I told the guys and gals in the chat room, I didn't mention to you guys on the Lunch Money webinar, but that's the reason why I got out of all my dollar exposure yesterday when the euro was down here at 109.80 yesterday afternoon. And I'm happy with it right now because I don't know what to do with the euro at this stage in the game. All I know is a rally up to 110.60 will be key, and obviously a break below the support down here would be pretty critical as well. And notice this is the mid-range of the euro, okay? And I would say a break above here. You got a dovish FOMC where everybody starts thinking, okay, we are not getting that rate hike until very late this year, or maybe even not until 2017. We'll break above here, and then obviously if people go, man, the door is wide open for a move in September, maybe November, but obviously you got the elections coming up, so that's going to be tough for the Fed to do. But if the door is still wide open, then maybe the euro drops. Because if you talk about the FOMC, there was an article actually in Business Insider yesterday, and there was some analysis from one of the banks. I forget who the bank analyst was, but I completely agree with the bank analyst. If there is a time right now for the Fed, if the Fed's going to raise rates and they want to squeeze in 2 rate hikes, well, I think 2 rate hikes for this year, their opening is today. Now, I don't think the Fed's going to move today, so let's just all get that straight. If the Fed raises rates today, you guys do understand the dollar is going to 100. The dollar index is going to 100 pretty quickly. So, if you go over to here's the dollar index. If you go to the dollar index, if the Fed does move today, which again I really don't think is going to be the case, that's where we're going. Very shortly, like within the next couple of weeks, we'll be right there. Okay. That's a big butterfly pattern. 261% extension, 127% extension of this move. We would be right there at the top end of this range if the Fed raised rates today. Now, again, I don't think they're going to, but I was reading that article in Business Insider yesterday, and I said, man, that is so right. If the Fed has in their mind, okay, we got to raise rates a couple of times in 2016. We have a couple more rate hikes to go in 2016 because they haven't raised since December, right? Then they've got to do it today, and then they'll do it again after the election, again in December of this year. Why? Well, look, stock markets at our all-time highs. The Brexit fears have been, they're probably real, more longer-term, impactful. Obviously, the near-term global equity markets have just brushed it off, and economic data still is strong. Jobs creation is still strong here in the U.S. Inflation data is, arguably starting to pick up a little bit. If the Fed wants to move, they got to do it now, because once you get into September, October, November, you run into the elections, which, knowing the Bernanke Fed and assuming that the Janet Yellen Fed is just an extension of the Bernanke Fed, they don't want to disrupt this election cycle. They don't want to be seen as the institution that disrupted in however that disruption looks like, whether you're pro Trump or pro Clinton. They don't want this election cycle to be disrupted by them. So, and there's going to be too much volatility around the elections this fall. They have to make their move now. I'll reiterate, I don't think they're going to, but if they do, the dollar is going so much higher very quickly. Okay, now going back over to the euro dollar, that means that we'll break down through this 109.50, and we're going to obviously break through 109, and we're probably heading back to 105. Okay, that would be more of a reality. And the only dollar position I have, and the only dollar position I'm going to hold through today, is short cable, just so you know. All right, anyway, that's neither here nor there, because again, I really don't think that's going to happen. I think the door is going to be left open for the Fed, but for them to move this fall, but I just don't see them doing anything until the end of the year anyway. All right, so 109.50, 110.60, 1.0950, 1060, and matter of fact, after this is 1.0910, which obviously you got your 50 here. You've got 109.10, which is the very low end right here. Okay, we're going to put that in just in case. Not saying that's going to mean anything, but just in case. Right? We're in a bearish trend. Now, just make sure everybody is clear why we're in a bearish trend. While we're below this yellow trend line right here, we're in a bearish trend. It's a bearish breakdown. It's just very choppy, but trying to make its way lower. Okay, let's talk about the cable for a moment. I am short the pound. Now, why? Because this is a failed inverted head and shoulder pattern. Then I get the comment, well, Blake, there's so many people short the pound. I understand it. I understand that. But I also believe that a lot of short-term, near-term traders, fast money, if you will, are along the cable, is expecting a recovery. And I think what they're finding out is it's not coming. So I personally believe, and I'm trading, you guys know, when I tell you guys I'm doing something, I'm doing it, and I feel strongly about it, I'm going to do it until proven otherwise. I strongly believe this is what's going to happen in the cable over the course of the next month or two. And I am also going to tell you that I am super excited about buying the pound here and putting it away for a year. Okay. Now, is that going to happen? I don't know. Do I hope it happens? Hells yes, I hope it happens. And if it happens, am I going to be all over buying the cable down here at 125 like, white on rice? Absolutely. Okay. Obviously I don't know what the future is going to hold for the cable, but that's how I'm trading it right now. And the only thing that's going to alter my view at this point in time is a break above 132. So if we break above 132 in the cable, that will then change my mind and say, hey Blake, you're wrong. Okay, which is fine. I don't mind being wrong, guys. You all you should understand that I am wrong. I can be wrong. I will be wrong. And for the rest of my career as a trader, I will continue to be wrong. But managing risk is the most important thing, so I know that I'm wrong if it gets above 132, and actually it'll be really above 131.75. Okay? Because if we break above 131.75, this thing gets bullish. Instantly. When I say instantly, I mean we get above here, maybe 132, but really it's right above here. Whoops. I'll fix that. It gets really bullish. I know that. I'm aware of that. I'm immune to that idea. Okay. But I also tell you this: if we get below here, which is 130.50, we get below there, and the likelihood of this happening becomes quite real. All right. So 130.50 is critical support. And guess what? Whether I'm right or wrong, I know this. Whether I'm right or wrong, I know this. A big breakout in the cable is coming. Whether it's above 131.75 or below 130.50, I don't care what you believe. But one of those two levels are going to break, and when it happens, it should be pretty good. Okay? Capiche? Good. Right now, it's bearish. This is a bearish formation. Lower highs, consistent lows is a bearish, bearish wedge. Okay. Consistent lows, lower highs, because everybody here is playing the I'm going to get long. It's a double bottom. It's a right-hand side of a shoulder. I'm getting long. I'm putting my stops below here. All stops are building right below there. Okay? Okay, where am I at? What am I doing? Okay, the Swissy. Frickin' Swissy, man. I'm not long right now, but I'll tell you what. If we break 99.55, I'm going to get long like Donkey Kong. Okay, I bought it yesterday at 98.97. I sold it yesterday at 98.22 or 21 or something like that, and I am not in it right now, and I should be in it. This thing, if we break 99.50, this will be the highest level that we've been since March of this year. That thing turns instantly bullish above 99.55. It's already bullish right now, but it gets even more bullish. Okay. Support. While we're above 99 cents, it's bullish. And I should be long, and I'm not. What time is it? Okay, let's do the Canadian really quick. Here's the Canadian. I'm long Euro Canadian. If you want to be long the dollar Canadian right now, I've actually contemplated buying the dollar Canadian ahead of the Fed. I'm not going to, but I was. I was when Paul was talking, and he's like, I would sell it if it got to 133. I agree with Paul that if we get up to 133 and change, that you got to sell it, and I'll share with you the reason why. But see this trend line? I was actually contemplating just an hour ago just buying it when we were down here in the 80s. I didn't, but this tells you that while we're above 131.60, it's bullish. All right. Why did I write that? Well, 132.50. I can write it as 132.45, but here I'll just be more specific in my analysis. 132.45. It's right there. 133, 10, 15. Horizontal resistance, 38% retracement, 161% extension. All comes in at 133.15 or 133.10. Okay. All right. If we get to 133.10, and if I'm long, I'd probably take profits there and look to reload on a dip. All right. I'll be back in a few minutes. When I come back, we have more to go, more to do. Almost got to remember that we got durable goods orders coming out today. I almost forgot about that. So entwined with what's happening with the FOMC. It's like, okay, well, I forgot that we have we have other data today. We got durable goods orders, and we have pending home sales. So anyway, okay, let's get back to business here. Where do I leave off? Got the Canadian. Let's go over to the Kiwi. All right, figure out the Kiwi dollar. So the Kiwi, what a rejection yesterday, huh? I mean, we came right up to the sell zone on the Kiwi. We hit the 70.75 basically and reversed. Now, unfortunately, I did not short the Kiwi dollar. I bought the Euro New Zealand instead, which happens to be doing okay. It's not. I mean, it's positive. It's not moving up a lot, but anyway, I'm that's how I'm shorting the Kiwi, not so much shorting the Kiwi dollar. But that really signals, in my opinion, the importance of that resistance, okay, and then also the support, which comes at 69.50. So it's 70.85, which is really, really key. If you're bullish, that needs to be taken out. Okay. If you're bearish, that needs to be taken out. And if that gets taken out, 69.50, then we are heading, well, actually there's 69.22. I always forget about that one too. Point 69.20 is a confluence of support, but it'll turn bearish after that. All right, we're in a range. Dagnabbit, we are mid-range in this uptrend, slight uptrend. We're smack dab in the middle, aren't we? Okay, let's go over to the Aussie. Now, Australian CPI data came in strong last night. And by the way, if you were on the Lunch Money webinar with me yesterday, you might have heard me say, buying some Aussie New Zealand. I bought some at right here at 106.40 something as we were approaching the support. We got below, and I was like, I'm like, it's Asian trade. I hate exiting stuff in Asia because, when it's just kind of grinding into a level. Because the thing about Asian trade, is they try to push support and resistance just enough to push your stops out, and then then they reverse. So the CPI data came out, we spiked up, and as soon as we got to 107.05 or whatever, I sold it. So I got pretty lucky that I was just sitting there when it happened. The problem with like the Aussie New Zealand now, if you look at this daily candle, Not saying we're going to close there, but yeah, we don't. If we close here, we're going lower. I mean, that's all there is to it. Anyway, that's how I was trading the Aussie last night. Now, the Aussie dollar, following the CPI data, I mean, we spiked up. I mean, look at this. This is a 5-minute chart. We went from 75 cents to 75.60 and then broke down. Now, that's not pretty. Any which way you slice it. That right now is an outside daily candle, which is a reversal as it is. It's going to be really ugly if we break through 74.45. Okay. And remember, we wrote down yesterday as 75.55. We went as high after the spike as 75.65. So 75, we're going to have to write 75.65 since we did actually surpass our resistance yesterday by 10 pips. But man, if this gives out, is it 55, 74? I'm sorry, 74.45. If that gives out, the Aussie is, you can stick a fork in it. Now, Matt in our chat room, talented trader in our chat room, Matt. He very observant. You know, he's been pounding the table on the CFTC data. This last reporting period on Friday suggested that you know, Aussie dollar longs have doubled in size. Their position size have doubled. Longs. Now, it's not a huge Australian position on the long side. It's not, I forget what the number of contracts were. It's like, went from like 6,000 to 13,000 or something like that. You know, it's not a big, it's a big jump percentage wise. It's not a big jump as far, it's not a huge jump as far as positioning. But what that suggests is there's longs in the Aussie right now that can get rolled over. And so my 2 cents is, if we break through the 74.45, we're probably heading to 73 cents. So on a strong dollar move today following the Fed, if that's what we get, this Aussie could get clobbered today. You have to imagine there's a lot of shorts that got squeezed out last night. There's a lot of longs that initiated because of CPI data that was in line. It was much bigger beat than last because it was such a debacle last month or last month, that I think people got super excited about the bounce back in CPI. But obviously, we can just decimate anybody who got long last night following today if we break that support. We are in a range. Let's go over to the dollar index. So here's the dollar index. I kind of gave you my vision on what could happen if the Fed actually raised rates today. Now, I honestly don't believe that. I hate it when people say I honestly, because I'm always honest with you guys, but I just don't, I don't believe the Fed's going to raise rates. I don't. But many of you already know this. I'm probably the worst Fed watcher in the world. Admittedly, like I'm not good. So, me saying the Fed's not going to raise rates today doesn't mean a damn thing. Okay, I think it's a good idea if they do raise rates, and I gave you my arguing points why, especially with the election coming up and with data and the benign Brexit impact, blah 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 blah. But I think the Feds are a bunch of wussies anyway. They're not going to do it, but they might. They did in December. No one thought they would in December, and they did. Now, our immediate risk right now. Well, I think we can just leave it like this, right? And let's just do this. Let's say they're a little bit more hawkish than the market believes they should be. 161% extension just above us at 97.77. Support at 96.75. If that breaks, then the dollar is going to be in trouble. Okay, so it's easy analysis. 96.75, 97.75, right? Yeah, 7. I'll write 77, but you guys get the gist of it. Okay. I still think we're in a range here in the dollar, but we break these highs, then it's going to go bullish till we get to the upper end of the range. Okay. So the best way, in my opinion, the best way to look at the dollar right now is this. There. That's the dollar in a nutshell. What do you do with it right now? I don't know. But what do you do with it if it breaks out? Below there, above there? I think you got a pretty good plan, right? Pretty good plan of action what to do. Okay? Now, let's go over to not where I want to be. Okay, let's go over to the peso. Here's the peso. Peso is strong. Continues to be strong. And the market's not even risk averse. If this market goes, gets turned on its head, this peso could go, man, we could be in Strongville. Resistance, 1894. Support, 1868. We're in a range, but it's pretty bullish in the range, admittedly, right? Okay. Here is the Norwegian krona. Norwegian krona, still bullish, but coming up to key resistance, 860.50. Our analysis haven't changed here. Support is at 852.50. I think we've been writing down the same numbers for the last few days. Swedish krona, I'm not long. I was long yesterday. I made some money. I sold the US dollar Swedish krona yesterday, like somewhere around here. This thing's looking. I mean, okay. I know I tweeted this out yesterday, but I'm just going to say it to you guys again. If the Fed raises rates for some reason, this thing is going so much higher, like scary move higher. And I forget who it was. I think it was Jonas yesterday. Who he's like, are we at historic highs? And I'm like, I don't think we are. And then I looked at this monthly chart and I said, oh yeah, if we break out, it's not even uncharted territory here. Okay. So $874, 862, 862, 874, and 874 is massive. And we're in a range, but we're threatening to go bullish here. Threatening to go really bullish here. Okay? All right, guys. There's your bias chart. It's done. A comment from Luca with a K said Adam Button from Forex Live recommends to buy the US dollar before they